Tom Stringfellow, healthcare has been the best performing sector in the S&P over the past 5 years. Do you expect that to continue?
We do. I think healthcare benefited by the rulings of Obamacare a few years back. Probably surprised a lot of investors, but candidly it opened up new opportunities for companies to deliver products to consumers that had not taken advantage of healthcare services before. I don't think that goes away. I also believe that regardless of any rulings that may come out of the Supreme Court over the next few days, if that indeed happens, I don't believe that's going to be detrimental to the healthcare business. I think that these are areas where consumers are taking more and more advantage, where companies are becoming more cost conscious, and where candidly earning streams, I think, are becoming fairly more consistent.
And what about biotech? That's been a driver of healthcare performance, but people are worried about the valuations.
Well, the valuations are high, and that's one of the issues. And are they going to be sustainable? Will gene splicing, DNA analysis, will that come up with new products? And there's a lot of literature out there that suggests that these things are more evolutionary or revolutionary, and what we're going to find are new treatments that are coming out of it. So it's like any speculative area, you've got to be diversified, don't over-focus in one area, and I think we'll see some positives over the next 6 to 12 months.
Now, I know you're also watching transportation stocks over at Frost. We've seen the transportation index come down over the past few months. This has a lot of the Dow theorists worried. What's your view of transportation?
Good question, and I think it speaks to the recovery of the consumer these days. I mean, we saw this morning with revision of GDP numbers, the consumer really is recovering. I don't know if they're alive and well yet, but if you've got consumer earnings going up faster than expected, if you've got savings still improving, you've got a healthier consumer. With healthier consumer, what you're finding are stocks such as airline stocks, whether it's a Southwest Airlines, a United Airlines, two companies that we own in both our respective funds. Both stocks came down really because of fear of overcapacity potential. We don't believe that's going to be as much of an issue as others are looking at. And airlines, last I looked, are still traveling at full capacity. I was on a very full flight over the last few weeks. We think energy prices are still stable, and we think this is actually a good buying opportunity versus a area of worry right now. Can
you talk about energy stocks? Because the price of oil has certainly stabilized around $60 a barrel. Do we go up or down from here?
Oil is the issue, I think, that's impacted the transportation stocks. It's definitely been one of the impacts. At $60 a barrel, personally, I think that's probably a fair price for oil. $100 was assuming highly speculative issues, whether it was a blow up in the Middle East or whatever the case may be. At $60, I think it's closer to reflecting true supply and demand. So with that, we've added a little more stability in the energy stocks. I can't say that they're going to have much movement over the next 12 months because I think people are still trying to figure out what's going to happen with Russia, what's going to happen with Chinese imports and exports, raw material. So right now it's kind of an iffy area, but I think it's an area that you don't ignore.
And then finally, what about technology? What's your view on technology? Do you like the old tech companies, the giants of just about a decade ago, or do you like the new ones?
Yeah, having a few years on me, I understand the old technology a lot more than I do the new technology. Yeah, I do not Skype, but I do like to go in and watch consumers touch, feel, and hold various goods. I like to go into the Apple stores and watch people go in and look at the latest products with Apple. Apple is certainly one of our top holdings within our growth fund, and candidly, it's been one that we've worried at times that it was overpriced, multiples too high. But then when you start looking at the product demand, the innovation in the company, I think it speaks to the new consumer, whether it's driven by the need for more and more technology, the need for more social media, the need for more cloud computing. That's the new technology stocks that I think are going to feed the drive. It may not be the Hewlett Packards of the world or the IBMs.
All right, thanks a lot for coming on.
Absolutely, appreciate it.